Are you trying to purchase a home but have bad credit? Well, in today's video, I'm going to teach you how to buy a home without stepping into a bank. And I'm also going to give you guys some credit building tools where you can purchase a home this year. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I created the first consumer credit software that allows you guys to put your credit repair experience into your own hands, guys. In today's video, I have a banger, guys. But before we get into the video, guys, I want to take the time to ask you guys to please like and subscribe to the channel, guys. Our channel is growing, and the algorithm, we almost in there, guys. We need you guys to continue to like and subscribe to the channel, guys, so we can get into the YouTube algorithm, and YouTube can push these videos to the masses so we can actually grow our channel and allow this content to reach a volume, guys. Thank you so much. Now, let's dive straight in, guys. I have a lot of meat and potatoes for you guys today, guys. Today, we're going to talk about how you guys can actually go into buying your home with creative financing, right? Creative financing is basically a creative way to actually purchase assets without going the traditional way, right? So the traditional way is going to the bank, going to a lender, and basically asking them to basically run an application where you can apply for the home. But this way, you don't have to worry about a lender. I'm going to basically give you some add-ons when it comes to a lender, but for the most part, the methods I'm going to give you guys is not required for you to have any other party outside of the homeowner. Okay, now guys, let's get straight into the meat and potato. Now the first thing that you really want to look out for when it comes to purchasing a home with bad credit is the builder, right? So if you know any builders in your local area, guys, reach out to them. See if they have any type of programs that that you can qualify for with bad credit. Sometimes with you purchasing a new build, they have programs where they can put you in a pipeline for the new build, and while your credit is going in the upward trajectory, your house is actually getting built. And if you actually go through the program correctly, the success rate should be where you basically, at the end of the program, you have the credit score necessary to apply for a home, and also the home is complete. So it's like a win-win. You meet in the middle. So yeah, guys, look out for builders, guys. Look up for builders in your local area, and just ask them, call and ask them how their programs is running. Now, guys, I do want to give you guys a takeaway when it comes to any type of home purchases. Now, one of the biggest things that stop home purchases is probably student loans. Now, I know I told you I wasn't going to go into the traditional methods on how you can actually purchase a home, but guys, student loans is probably one of the biggest killers, because even if you do go into these methods, the homeowner might want to run your credit and might want to go off your debt to income ratio, and student loans can kill your debt to income ratio, because whether you're paying them or whether you're not paying them is actually being counted towards your debt to income ratio in your lifestyle. So make sure that if you can, guys, if you can, before you even go into these methods, a lot of these home professionals want you to actually be prepared. You know, they don't like to actually put a lot of legwork in actually getting you qualified from bad credit point A all the way to closing point B. You know, so the more you can come prepared as possible, and that's the purpose of this video. So student loans, guys, call your student loans, whether it's private student loans or whether it is a public student. I got an eyelash in my eye, guys. I apologize. You want to be a part of the video so bad. But yeah, student loans, whether it's private student loans or public student loans from the government, you want to make sure that they are handled at the best of your ability. Okay. Now, these other methods is not really going to have a third party involved, right? The first method I want to give you guys is seller financing, or you can call it owner financing. And basically, seller financing is when the owner of the property that you're interested in have full ownership, meaning they have the deed and they have the house is fully paid off and they are selling that house. Once they do that, they have the availability to basically go into financing for owner financing for the person that's interested in buying the home. Now, owner financing is basically that person giving you a loan on the property without a bank. So the guy or the girl or the woman or whatever, whoever owns the property is the bank. Whoever owns the property is the loan officer that's basically giving you the loan, and you have to treat the owner of the property as the actual bank. So they would be the person you report to for any type of mortgage or your taxes or anything like that. So it's a negotiation that you and the original owner of the property have to basically negotiate terms and conditions that is associated with that particular property. Now, guys, I do want to give you guys a head up. When you do buy seller financing, they are a little traditional. They're usually traditionally more expensive than the average market value, right? So, and that is probably the downside of it. That you're going to pay a premium because you are buying it. You're buying it seller finance as opposed to conventional. Because when conventional, the bank pay them off and they get all the money in cash, and you can basically negotiate all your terms with the bank from there. But with seller financing, they still have to be involved. The parties have to be involved. Still have to be involved even after the purchase of the property. So they usually are more expensive. Now, rule number 3, right? So we went from rule number 1 was student loans. Rule number 2 is going to be seller financing. And rule number 3 is going to be called a subject to. Now, subject to is basically when the bank still owns the property. It's similar to a seller finance, but it's when the bank owns the property and a third party still owns it, right? So say James owned the property. Chase Bank is the person that James pays his mortgage to. Chase Bank has the deed, right? And you come along and say, I want to buy this property from you under a subject to. That basically means that you would take over his mortgage payments with Chase. Does that make sense? So so that's basically the difference between a subject to and a seller finance. A seller finance, the person have to have the property outright and own it outright, versus a seller to. A seller to, they can have ownership or equity into the property, and that's typically is when a third party bank or lender is involved, right? Okay, so number 1, student loans, student loans, student loans. Number 2, we're gonna talk about, or we talked about seller financing. Rule number 3, subject to. Subject to is great, guys. And later in the video, I'm going to give you guys a brief sample video of some websites, some very popular websites that you could probably go on and find these type of deals. I'm not gonna lie, you're gonna have to hustle probably to find the home that you are perfectly comfortable with. Seller financing, owner financing, subject to properties are not marketed to the masses like that. Conventional is obviously the more desirable way of financing, because like I said, they get the full payment in full they get the full payment in full as soon as you're done with closing, almost. So versus when they still have to give you a term agreement that can last almost 30 years. So yeah, so you have to find these properties. But like I said later on in the video, I am going to slide over to my desktop and give you guys a quick sample of how to actually go on these websites, go to the filter settings, and basically filter out the financing options where you can actually go in and have a full list of properties that's only owner finance. Subject to is not so easy, and they not really on websites like that. Like I said, you probably have to really hustle, or you probably have to find some third-party websites that actually market for subject to real estate, guys. But it's definitely work. Now, I do also I want to add a caveat, so to speak. So when you do go into these financing options, guys, you typically have to put down a higher deposit. Down payment, right? So guys, this is basically what you want to look out for. You want to basically ask, how is the insurance basically set up with the deal if you're interested in doing a seller finance or a subject to. Also guys, you want to ask how much equity is in the deal already. You also want to ask, find out the loan agreements and understand that the liability does not shift when it comes to subject twos. Now guys, the last but not least, and fourth, is basically a land contract. So land contracts is similar to a seller financing, but they're typically done for smaller property values. So if you could find a home like in Detroit or Gary, Indiana, or Chicago, and find the properties a lot lower than what a traditional home is, and I mean a lot lower, like 20 grand, 15 grand, and I'm talking about shotgun houses and things like that, where you can basically turn them to rental properties and basically start and get your foot into the investing game. And those are called land contracts. And land contracts can be negotiated when the party owns full equity into the property, and basically don't have any lenders or bank institution connected to the interest of the property. Now guys, land contracts, like I said, is probably the most common when it comes to smaller value homes, and they work. They are basically set up for the client in the owner of the property. Every land contract is different, and it basically is stipulated for the conditions of the two parties. Now guys, I want to go into this website and give you guys a little example of how to filter out those options where you can actually go in and find those owner finances properties. Guys, stay tuned. So like I said, I wanted to bring you over to the desktop to show you guys a quick sample of how easy it is to find these properties on mainstream websites all over the country. So I'm on Trulia. Trulia is a website that you can literally buy property all over the country. Just type in your zip code or location. You can sign up for an account, and it literally has thousands and thousands of properties on this website, guys. But for the most part, it's very simple to actually look for owner finance or for sale by owner. So all you have to do is type in the location, of course, but once you have the location, come over to the filters, go to more, and select for sale by owner. When you select for sale by owner, it will only show you the homes that's been sold by the owner. So I'm in Houston, and you can literally see all of these properties that's being sold by the owner, guys. And that means that you can basically go to these properties and start your own negotiations with these property owners and ask them what is the criteria, and start opening negotiations where you don't even have to include the bank. If you have the cash for the down payment, you basically can write your ticket for the properties that you are qualified for, guys. All you have to do is basically call the real estate agent and ask for additional details. I'm gonna show you another website. This is another website called HAR here in Houston. And basically you go and do the same thing. Go to the filters, go down, owner financing right here to finance considered, and you click search. And it will literally show you all of the properties that's being sold in Houston for owner finance. Now guys, these are going to be a lot of land and millions of dollars, of course, but as you can see, it has rows and rows and rows, and as you go down, you can also put in your budget and actually, you know, where it's actually more reasonable for, you know, a traditional household, and actually, you know, start the negotiations here as well. Now, as you can see, some of these properties are going to be under contract because these owner finance houses go fast. So guys, you want to jump on them as quick as possible, and you know, see what you can do. All right, guys. Now, guys, if you found any of this information helpful, and if you do not have any socks on, guys, I want you to like this video and subscribe to the channel, guys. If you have any questions, please send us an email at support@creditdisputecloud.com. Visit us at My Credit Approved. If you have any derogatory marks, guys, we are wiping charge-offs off. We are getting all of the charge-offs removed, collections removed, late payments removed, all of the derogatory marks, guys. If you're looking to go into conventional and you want to actually basically save some money and, you know, lend some money from the bank, you can basically start the credit repair process yourself, guys, at mycreditapproved.com. Guys, it is the best state-of-the-art software that allows you guys to go in, create your own dispute letters that's customly written and helped by attorneys, guys. So guys, if you have any questions, mycreditapproved.com. Till next time, guys, see you soon. Bye.